Forex trading is absolutely for real. Over the last few years, I've seen literally thousands and thousands of people who are jumping on board the Forex bandwagon. And that's simply because there hasn't been a chance like now that presents itself an unprecedented opportunity for retail people like you and I to be making money just on the internet. Can you imagine? All you need are basically just two things, right? The internet connection and a laptop or a mobile phone. Now, in fact, let's give you 3 examples, all right, of normal people. Because when you ask the question, can real normal people be making money? Let me just share with you 3 examples that just jump out at the top of my head. Right, number 1, I want to share with you about a student. His name is Damien. Now, Damien, while studying, all right, he actually heard about me. He signed up for one of my programs, and it literally blew him away. As a 15-year-old boy, now get this, he's just 15 years old, and he's already learning the essence of global finance, of how to make Forex, or rather how to earn passive income on the market, all right, in Forex trading. So that's one, that's Damien, who's a 15-year-old student. Number 2, I have a student called Tommy. Now Tommy is he's a working class adult, all right. He basically quit his job, all right, after a few years, because essentially what he was earning in the Forex market was literally replacing his income that he's making from his day job. So today Tommy's about 38 years old. So when he came on board the Forex market, he basically just wanted to find a means for what I would call an alternative income. But because he went on to do so well, all right, the income that he was making in the Forex market was literally more than the income he made from his day job. So today, I'm proud to share with you, all right, Tommy is a living testimony of what the Forex market can do to replace your day income. Now the third student I want to share with you, her name is Mrs. Ng. All right, so Mrs. Ng, she's a retiree. She's a school teacher. She was a school teacher, and then when she came on board and she wanted to understand and learn the Forex market, because she wasn't earning any more income, and she had so much time on her hands. So she is about 68 years old today, and when she understood and she wanted to learn, she said she wanted to go slow. So basically, she took up the program. She went at her own pace, and today she's making a few $1,000s a month. All right, just sitting at home, 15 to 20 minutes a day. All right, trading a certain simple strategy that helps her to make money in the Forex market. So my answer to your question is absolutely yes. Forex is absolutely for real. And those are just 3 examples of everyday people who are making good money from the Forex market. That's a great question. I get that question a lot everywhere I travel. It seems to be the most basic question that many people, when they have a slight understanding of investing or equity trading or even Forex trading, it always comes to that comparison. Is Forex trading riskier than the stock market? So let me just allow me to just share a little bit. Now, some of the key differences, all right, between the Forex market and the stock market, essentially. Let me just share with you 2 key differences. Right, number 1. The stock market, regardless of whichever country you are in, Philippines, Malaysia, Thailand, Singapore, the stock market is only open about 8 to 9 hours a day. All right, so that's when there's sunlight in that country, essentially. It opens about 9 a.m. to about 5, 6 p.m. And you can't be trading the stock market basically in the evenings, all right, whether it's 7 p.m. or 8 p.m. Now that is entirely not true in the Forex market, all right? The Forex market is the only market that is essentially open 24 hours a day, all right, 5 days a week. And the only reason why it's open 24 hours is simply because every single day countries are doing business with one another. There's cross-border international trade, and trades are being settled almost on a daily basis, on an hourly basis even. So this is one of the biggest advantages that the Forex market has over the stock market, is that it's open 24 hours as opposed to the 8 to 9 hours that the stock market is open. Right? Number 2, key difference is that the Forex market has unprecedented liquidity. All right, let me explain. Now, if you look at the largest stock market in the world, the New York Stock Exchange, all right, the current volume there is about $70 billion in a single day. Now, can you imagine in the Forex market, right? The turnover, right, the daily turnover is actually $4.3 trillion in a single day. All right, it is about 50 times the size of the stock market. So it is absolutely huge in terms of its liquidity. In fact, the Forex market is bigger than the world's stock markets and the world's futures market combined. That is how huge the Forex market is. So with the 24-hour trading every day, with the unprecedented size and liquidity, the Forex market is already ahead of the stock market in terms of advantages. So now let me just answer your question when you say, is it riskier than the stock market? And I felt it was necessary to cover those 2 points because it leads into what I'm about to share. Many people have the impression that the Forex market is risky or riskier than the stock market simply because they have the impression that you win big and you lose big, right? Not true. Let me just bring up 2 important points. You see, when it comes to Forex trading, the first key point, all right, in Forex trading, you've always got to put a stop loss. Now what that means, right, if you enter into a trade, okay, let's just say you enter into a buy trade and you basically want the prices to go up, yeah? Now you need to have a place called a stop loss, whereby if the trade doesn't go your way and if it comes all the way down, you need to have a level that you're cutting off the trade and you say, this trade, I'm accepting that I'm wrong, it's not moving in my direction, I had better exit the market early. Now, in our lingo, that stop loss that we call, we never lose more than 3% of our equity when we hit our stop loss. So as an example, if you start in a Forex trading account with say $10,000 US, right? Now 3% of 10,000 is essentially $300. So if you hit a stop loss for your trade, you are now ending up with $9,700 US. So with a stop loss, there is no way that Forex trading can be risky. Now conversely, after you understand that point, many traders in the stock market are just not used to the term of stop loss, because whenever they buy a stock, if you will, all right, they are always expecting the stock to rise, right? And when they expect the stock to rise and it doesn't rise, all right, if it goes against their direction, then essentially they're just holding on to that trade. So if you were to ask me, a Forex trader who is so used to putting a 3% stop loss, right, you will actually see that I advocate to the theory that stock trading is in fact riskier than the Forex market, because in the Forex world, we are so used to putting a stop loss to protect our downside, but I don't see that in the stock market. Not many stock traders essentially put a stop loss. So that's how I would say that the stock market is in fact riskier than the Forex market. Now let me just move on to the second point, which will be very interesting to normal retail Forex traders or retail stock traders, right? I want to come to this point called intervention. Now, over the last few years, all right, you're seeing literally so many central banks that are pumping massive amounts of cash in the world's financial system. All right, you're looking at Japan, who has intervened. You're looking at the Swiss National Bank, all right, the Central Bank of Switzerland, who has also intervened. The US has pumped in QE 1, 2, 3, so on and so forth. Now, here's an interesting fact. Let me just zero in on one central bank called the Bank of Japan. Now, the Bank of Japan, among most of the developed world central banks, is one of the central banks that has always intervened in the Forex market. And they will always make known their intentions of intervening. Now let me explain. Essentially, Japan is an export-oriented country. When they intervene in the markets, they're essentially intervening to sell their currency, all right, to weaken the Japanese yen, right? Because with a weaker Japanese yen, it protects their export market, right? Because as an export-driven country, you cannot afford to have your currency to be too strong. Right, because then in that case all the other countries they're not able to afford your goods, so to speak. So they've always got to ensure that their exchange rate, the Japanese yen, is in a weak fashion. Now, over the last couple of years, right, the Bank of Japan has actually intervened a few times to weaken their currency. Right? And the beautiful thing for all Forex traders around the world is that they will signal their intentions early. You will hear the finance minister or even the Bank of Japan chief, all right, they will say things like, the current exchange rate doesn't reflect the market's fundamentals. They're already warning traders ahead of time that they're about to intervene in the Forex market. And that's great news, because then you and I are able to go on for the ride, all right, and just click sell on the Japanese yen and make that money, all right, almost instantaneously, because you're now riding on news that the finance world, that the finance chiefs are telling you. That's beautiful. Now, you might have another question, Mario, why would the central bank chiefs, why would they actually tell you that they're about to intervene? And here's the answer, right? The answer is this: they essentially want our help to follow them in that direction so that they don't have to spend more to intervene. Alright, as an example, if they have set aside say $20 billion to intervene in the Forex market, if they signal their intentions and many Forex traders are jumping on board that intervention trade, they essentially don't have to do the heavy lifting by themselves because Forex traders are already jumping along on the same side. It can cost a lot of money to intervene. So when they signal their intentions, alright, they are essentially, they need our help. Now, I know that's a long explanation, but now let me just jump back to the stock market. Now, as a comparison, would any institution ever signal their intention to buy a stock at a particular price? It will never happen for two reasons. Number one, they might get thrown into jail for insider trading. But more importantly, number two, no company would actually say, all right, I want to acquire a stock at a certain price simply because if that news reaches the market, right, and many retail traders jump on board and start bidding up the price, it becomes more expensive for that company to acquire the stock at the price that they had intended. So when you compare all these very important factors, can you imagine that in my personal view, the stock market is so much more riskier than the Forex market? So that's the answer. You're asking all the right questions because these are the top 3 questions that I get from literally all the students or all the friends that I'm meeting all over the world. I always say this, I was a beginner as well. I started off as a beginner, and I took the right steps, right, for me to achieve a certain level of success today. So let me just give you a quick snapshot. If you're a beginner today and you really want to start on your Forex journey and start making significant income, all right, whether it's part-time or full-time, you need 3 things. All right, you need 3 things. Now, number 1, you need to decode breaking news. So what that means, right? We are living in a world now where news are literally flying in from so many different places. All right, you're seeing Ben Bernanke, who has literally announced QE3, or sometimes in our community we call it QE Infinity, where he's basically injecting $40 billion every single month with no expiration date. You're seeing the ECB flooding the market with cash. You're seeing the Bank of Japan easing. You cannot afford to ignore news anymore. So the first key point that you need to understand is how to decode breaking news, all right, that is basically being announced at almost every hour. That's the first point that you need to do. Number 2, you have to execute live trades. Now, in the Forex world, let me give you an example of a Forex broker. You see, Forex brokers, they give you basically 2 types of accounts, right? They give you a practice account and they give you a real account. Now, a practice account simply means live prices but with fake money. So you are trading with virtual money, right? Then you have a real account where you are seeing live prices but with real money. You're trading with your real money, right? Now, when I say point number 2, you have to learn to execute live trades. There is definitely a place where most people would trade demo or a practice account. But if you want to be making significant amount of money in the Forex market, then obviously you have to be trading with a real account. And when you trade with a real account, your emotions get pulled in, right? So that's point number 2. You have to execute a live trade, not just once, but literally over and over and over again. Because the real goal that you want to see is to have your account being compounded a few times over. Number 3, you need to be mentored daily by a qualified coach. You see, you might be able to decode breaking news. You might be able to execute a live trade. But if you don't have a coach that is to sit next to you, all right, and to point out your mistakes and tell you where you have gone wrong, then you wouldn't really know where you should be improving at every single day. So these are the 3 main points. If you want to get serious with the Forex market or even just getting started on the right footing, you need 3 key things. All right, number 1, you need to decode breaking news. Number 2, you have to execute a live trade. And number 3, you got to be coached by a qualified mentor. And that's my job essentially, because I've walked through those steps. Right? My previous mentors have taught me exactly these 3 ways, and that is the best way I know how to coach you or literally any other person to become world class. So those are the 3 points that you must have, all right, to become consistently profitable in the Forex market. Yes, I've got a great sentence I want to share with you. In fact, this sentence is the opening sentence of my upcoming book. All right, the sentence goes like this: you cannot afford to to ignore the Forex market anymore. You see, we have come to a stage, alright, that the Forex market literally has taken over the entire world, and there's unprecedented opportunities for you and I to be making good money in the Forex market and change our financial destiny forever. So I'm heading to Manila in the Philippines on the 27th of October, and that's coming up real soon. And in that seminar, I will be sharing with you, alright, the exact tools and strategies that you would need, alright, to be making good money in the Forex market. Now, the tools and strategies that I will be sharing with you, alright, have been learned by over 20,000 people worldwide, including some of the biggest banks in the world. Alright, and these tools and strategies are applicable to the banks as well as to the retail trader, simply because we have one common goal, and that goal is to become consistently profitable in the Forex market. So I do hope to see you in that seminar on the 27th of October. Let's rock the Forex market together. I'll see you soon.